What's going on YouTube? If you're new here, my name is Juliette Robelo and I'm a realtor and investor here in Orange County, California. Today's video is going to be a bonus video, not part of my normal schedule, but I just wanted to get this out to you because what's happening in the US Treasury is unfolding so fast. It has a lot of people confused and wondering what is going on. Long story short, US Treasury yields are spiking, and some people think that it's because China is selling off US debt in response to the new tariffs that we just placed on them. This kind of thing usually happens quietly in the background, but not this time. It's loud, fast moving, and important. So in this quick video, I'm going to explain what US Treasuries even are, why this China tariff situation may be pushing yields higher, and how it all affects you, your loans, your investments, and your money. Let's break it down in a way that's clear and easy to follow. So I want you to imagine that the US government is like a grown-up who needs to borrow money to fund the military, build roads, and send out social security checks. So they ask people in countries, hey, can I borrow some money? I'll pay you back later with a little extra. That little extra is the interest, also called the yield. The paper or digital receipt that promises this deal is also called the bond. So who buys these bonds? Countries, including China, buy lots of these bonds because, for one, they trust that the US will pay them back. Two, it's a safe place to keep money. And three, they earn some interest, kind of like putting money in a savings account. So what happened recently? Okay, so here's where things get interesting. So as one of the biggest holders of US Treasuries, China can sell its bonds at any time. And they might do that for a few reasons. For example, they might need cash at home. They could be trying to diversify away from US investments. Or, and this is what many suspect, they're reacting to US tariff policy and using their bond holdings to send a message, or at least remind us that they can. So what happens when there's a big sell-off? So I want you guys to think of bonds like apples at a market. If everyone suddenly tries to sell apples at the same time, apple prices will drop. There's just too much supply. So it's the same thing with bonds. When lots of bonds are sold, their price goes down. But when the price goes down, the yield or the interest goes up. That's just how bond math works. Prices and yields move in opposite directions. Prices down, yield up. So why does any of this matter? So you might think, higher interest and lower cost bond. That sounds great, but that's not necessarily the case, and here's why. When the US government suddenly has to offer higher yields to borrow money, it raises the bar for everyone else. And just like that, car loans go up, student loans go up, credit card interest goes up, and mortgage rates climb too. But it's not just about personal finance. When a major player like China dumps US debt, it can rattle confidence in our own economy. We start to look less stable, which can make it harder and more expensive for the US to borrow, trigger inflation fears, and just spook markets around the world. Even if you're not following this closely, you're going to feel it in your borrowing costs, your investments, and even your monthly budget. So yeah, this might seem like background noise, but it's not. The safest investment in the world, the US Treasury, isn't feeling so safe anymore. So if this helped you make sense of what's going on, please be sure to hit that like button and be sure to drop a comment below. Do you think China is really selling treasuries, or is this just Wall Street reacting to rumors? And be sure to subscribe. I'll be back this Sunday to talk about how I'm going to be approaching this week with the wild market and everything that's been going on. Thank you guys so much for watching this bonus video, and I will see you guys in the next one. Have a wonderful weekend. Bye.